Welcome to Doc9 Tech Talks.
Good morning, everyone. Last month, Iress released their latest annual mortgage efficiency survey, which I think had some really interesting findings about the current and future digital adoption within the mortgage sector, especially in light of COVID-19. So I'm delighted to be joined today by Steve Carruthers, who is the Principal Mortgage Consultant at Iress, to talk about some of the key findings. So firstly, Steve, thanks for joining us. Before we dive into the survey, do you want to start by giving us a bit of background about yourself and your role at Iress?
Absolutely, thank you. Good morning, Mark. Good to be joining you. Yeah, as you say, my role at Iress is principal consultant. So what does that actually mean? It's primarily about working with lenders, mortgage lenders, UK mortgage lenders in the main, to try and understand their, I guess, their technology needs to support their mortgage journeys. So the kind of the processes for their distribution channels, whether that be for broker or direct, and then their operational and underwriting side of the business as well. So, so really, facing off externally, speaking to all kinds of lenders, whether that be the high street type lenders or smaller regional building societies, or indeed the specialist sector. It's not just about the lenders though. So I kind of face off into other key stakeholders across the mortgage landscape. So all the distributors, so the mortgage clubs and the networks, etc., and the trade bodies, other fintech organizations, media organizations like yourself,
Yeah.
Trade press, just basically anyone and everyone that's concerned in the mortgage market. So I can really keep abreast of what's going on and help inform our teams internally as well, so that we're always looking to try and understand what's happening in the here and now, but equally what's coming down the tracks as well. So
Okay.
That's me in a nutshell.
Cool. And so who are some of your kind of key clients in terms of lenders at Iress?
So yeah, so the lender client base is ever growing. So I think we're now let me go through. So we've got Atom using our MSO, version 2 of MSO. We've got Yorkshire Building Society Accord. We've TSB. We've just gone live with Principality Building Society.
Okay.
Leeds Building Society has also gone live, and there's more to come. So it's an ever-growing list of lenders, which is great news for us.
Sounds good. So in terms of, I guess before we talk about some of the key takeouts from your latest mortgage efficiency survey, in terms of the logistics of it, I think, am I right in saying that the research period overlaps with kind of lockdown, and how did that go, and how did you organise all this?
It did. I mean, like people often say in life, isn't it? Timing's everything.
Yes.
And we obviously none of us could have predicted what unfolded 6 months ago or so. We'd always anticipated changing the format of the survey, and we'd taken a lot of feedback from lenders that had participated historically. The survey's been going 8 or 9 years, and we decided to kind of freshen it up a little bit. The approach this time round was very much doing face-to-face interviews, very much like this, with lenders, being much more discursive and a kind of more of an open kind of discussion.
Okay.
So we kind of booked in all the lender interviews really just as lockdown started.
Wow. Okay.
So we were kind of talking to lenders whilst they were having to deal with all the changes that they were having to deal with right at that moment in time. So deployment of their staff to go and work from home, making sure that everyone was set up and enabled to work in terms of their technology needs, dealing with the immediate impacts on their existing and new mortgage customers as well, dealing with this whole new furlough scheme that was being introduced at the time. So it was just a whole raft of change that was happening literally on a daily basis. So it was fascinating to be able to get that sort of brief glimpse and insight
Yes. Did they keep those meeting slots with you then, or they?
Yeah,
Yeah.
I mean, we had, I suppose we had the odd one or two lender that as understandably, as you'd imagine, they kind of said, well, could we rearrange a few of the appointments, but we kept on, nobody cancelled. And I think, given the kind of the time that we were going through, and we continue to go through, lenders were keen to talk, and kind of as much about us wanting to hear from them, they were keen to hear from us,
Yes.
knowing that we were talking to other lenders.
Yeah.
So it worked really well from both perspectives.
Sounds good. So yeah, busy time during lockdown and after. So in terms of the survey itself, you released it last month on a webinar, and which was I thought was really interesting. Do you want to run through the kind of some of the key takeouts from that, especially I guess in light of COVID-19 as well?
Yeah, I mean that's probably one of the biggest takeouts. So is the immediate impact that COVID's had and continues to have for lenders. So I think it's fair to say for all the lenders that we spoke to, and I guess probably indeed for yourselves, ourselves, we all have technology plans, or we all have strategic plans for our businesses, and without doubt those plans have had to change. In some instances, it's turned the lenders' plans on its head. In other instances, it's kind of accelerated those plans in certain situations. But definitely, that was one of the biggest impacts that we saw, was that these plans are having to change fairly quickly. Another really interesting and common insight was the lenders' views that consumer behaviours pretty rapidly. Again, we're all having to experience different ways of interacting with businesses, and even on a personal level. I've probably done more Zoom calls with my family than I've done in my entire life. So consumers are driving and want more digital engagement. So that through really clearly from the discussions with the lenders. But equally, whilst digital engagement is accelerating, it's not at the complete expense of human interaction and I guess and manual checks. So what we found really interesting, particularly, one of the things that we did, Mark, was we grouped the lenders into peer groups. We'd had feedback in the past from, as I say, from previous participants who said, it's great to take part in the survey, but what we'd really like is to be able to compare like with like. Makes sense. This year we had 36 lenders take part, which we've ever had. That's the largest level of participants, which is great. So what that enabled us to do was create peer groups. So we created 4 peer groups: high street lenders, large building societies with kind of national coverage, the regional building societies, and the specialist and challenger. Right? So I guess what we were starting to see, which was really interesting, was that the high street lenders, who traditionally would employ technology to look at the large and deal with a large volume type business that they process. Ostensibly, they're looking at kind of sausage factory volume of business, straight through processing, touching the size. And COVID had clearly changed that. They were having to look at many more cases on an individual basis, from underwriters taking more time to do manual checks. So we started to see that come through in a number of instances. So that kind of hybrid approach going forward, that in many ways, that the smaller building society, regional building societies, and the specialist sector, they've been in that arena for quite a while. So so typically more automation becoming evident, definitely as a result of COVID, but equally, lenders recognizing that challenges they've got around cost income ratios as well, and margin pressure, looking to try and create more efficient ways to process their business. It was really interesting to see how technology has been embraced by lenders in terms of, those lenders that have got older legacy systems, where it's harder to either improve on those systems or connect those systems, and to remove them and replace them. Having been a lender myself, I know how difficult that is.
Yeah.
And then you've got, we spoke to a number of the smaller challenger or growing challenger type lenders and the specialist lenders who are able to go and maybe buy technology platforms off the shelf and implement them quicker, be much more nimble and flexible. So that's, you could get a real sense of where lenders were. One thing that came through was that all lenders they share a common goal.
Yeah.
Everyone wants to try and make the house buying or mortgage journey as smooth and as slick and as efficient as possible. But everybody's they're all at different stages of that journey.
Yes. I think one of the things that was really interesting in your webinar a month or so ago, and the research itself, was highlighting that a lot of focus so far has been on the early stage, the dip journey, and actually and you can understand why people are trying to drive volumes, and that's kind of the first kind of touch point, I guess, with the consumers, be they brokers or borrowers. But actually, if you think about the totality of the mortgage journey, is the application to processing through to being and I guess all the way through to conveyancing and becoming a live loan, that has perhaps bigger opportunities now for delivering some more cost efficiency. Are there any kind of insights around that you could share?
Yeah, definitely. As you say, Mark, it was fascinating to learn just how much focus and impetus there's been at that front end, at the kind of sort of pre-dip and affordability, the decision in principle and the application process. But lenders have, without a doubt, focused a lot of their attention, their investment at that part of the journey. Lenders have needed to be at the races in terms of their distribution, whether that be direct or broker, to have a really credible proposition to capture the business in essence and get the business in. But once it's in the process, it's it's really interesting that the back end, so your offer and completion parts of the process, they were really really different, and lenders really marked that part of the process down. We were able to assess themselves.
Yes. And
they felt that that was the part of the journey that was least automated. Very heavily manual. And as you say, definitely ripe for some innovation and improvement, definitely.
Yes. I guess even you said that you'd split up the research into kind of high street all the way through to kind of specialist, and I'm at the specialist end in particular, you'll always need that human interaction where he can add value around understanding a case and making a decision. But really, a lot of people I speak to is sort of coalesce around this idea of the kind of augmenting human effort with technology where it really helps. So the kind of manual tasks around lookups, grabbing data, and etc. I think that's probably one of the big opportunities at the moment.
It is. I think lenders again, realised quite quickly, and thankfully very quickly, on the back of COVID, there were certain aspects to the journey that they needed to address to keep the market alive. And so a great example would be AVMs. Lots of data available. We know AVMs have been around for a while, and some lenders have adopted AVM technology and have been using AVM technology for a while. But I think almost every single lender we spoke to had said, yeah, we've had to use AVM. We've moved, even the smallest of the smallest regional society, they're using AVM technology, and that's likely to be a technology that will remain moving forward. They realize the benefits that it has.
Yes, I guess as they get more comfortable with technology, for certain parameters of cases, they'll be happy to kind of utilize it more. That's a good kind of specific sort of change. I think there's many others, aren't there, that's similar. I guess
wet signatures.
Wet signatures is
another one. Yeah, again, another fascinating insight, and it comes as no surprise, I guess, as well, is just the high level of print and rekey that still exists in the place. So whilst, from an outsider looking in, it might look like it's all really slick and straight through, but in actual fact, behind the scenes, many systems aren't connected up, and there's still a lot of printing and rekeying going on.
Yeah.
A lot of paper being used. So some lenders are still, or were still, printing copies of offers and posting copies of offers to solicitors. They saw that the need to change, and that's another area that hopefully will be a continued improvement.
Yes, I guess that probably highlights that ultimately, to make this experience much better, the end-to-end experience requires many different parties to adopt new technology and share that. And I guess the first kind of obvious one is around, brokers and lenders passing data electronically and not having to rekey data into portals, which still amazes me. It's all fairly common nowadays in many instances. So I know that you, Iress 27 Tech, Mortgage Brain, all working on sort of various solutions to kind of solve that challenge. And your product, Lender Connect, is there any kind of update on the progress of that? I mean, was that integration work sort of put on hold during COVID, or has that kind of continued to accelerate? And is there any kind of recent updates you want to give on that?
Yeah, no, absolutely. Timing being everything, Mark. Again, we just made some really great announcements recently around Lender Connect. So no, there was no halt or no real big delay to all the work that we've been doing with Lender Connect throughout COVID. So we were really pleased that we were able to continue to progress with Lender Connect and all the parties that we're working with. And so we announced fairly recently a pilot with TSB, they're an existing Iress MSO user. And that's gone really, really well. So that's going to be rolled out formally. They've been using Lender Connect with the likes of London Country, who are a non-Iress technology user. So one of the beauties of Lender Connect is it's technology agnostic. So London Country, Quilter, another one of the large distributor partners that we work with, and who use our Xplan and Xplan mortgage software as well. And another non-Iress client, Aldermore.
Yes, I saw that recently.
So they've just announced that they're partnering with us, and again with some of the other parties that you mentioned earlier. So without a doubt, Lender Connect is moving forward. I'd love to be able to talk to you more about others that are coming on stream. But
skip today that I can release and tweet out.
I wish I could. But genuinely watch this space. That there are more coming on board fairly soon, and understandably so, because the pilots that we ran with the likes of TSB, with Aldermore, London Country, etc., they've demonstrated just how much benefit there is in the time saving as well using Lender Connect. So I think I've got, if you bear with me, indulge me, I've got a quote here from someone that took part in the pilot. So here it is. A typical TSB application would take over 20 minutes to key, but that can be reduced now down to 5 or 6 minutes. Significant time savings. No need to rekey. So really good.
That sounds positive. And I guess it's one of these things that I guess when you look at the mortgage sector, it's been kind of obvious needs to happen for a while around plugging the different parties together, passing data electronically, which we do a lot of work in other sectors in the financial world as well, and it's just it is a bit behind. So that's great that it seems to be accelerating forward. I guess the other positive thing in that is that there are different vendors offering different solutions, and I guess for this really to push forward, they kind of need to be agnostic and talk to each other as well, so we don't end up with a new sort of spaghetti junction of APIs, and so that sounds positive.
Yeah, exactly.
So I guess if we take that a bit further, then in terms of the mortgage journey, and we've identified some opportunities around utilizing technology during the application and processing, etc. If we take that forward to legals and conveyancing, so you mentioned around some lenders were I think printing documents and still sending them to solicitors, and my last house move was 4 years ago, and that was very paper based, which was a little bit surprising, but But I guess if we think about the whole journey, really that is a lot of times where the pain happens for consumers, for the borrowers.
Yeah.
Do you see that changing at the moment? Are you seeing any kind of moves? I know it's not directly what your focus is on, but are you seeing any momentum for that in the conveyancing world?
Yes, I think it's like the classic analogy of turning the ship tanker, isn't it? It
Mm.
seems to be taking an age, but I think COVID will have undoubtedly helped accelerate some of the change in that area. We're seeing more and more digitization, particularly in the with land registry, which
Yep.
that really will help.
Mm.
And I've read recently some of the local authorities throughout England and Wales are trying to digitize more of the searches as well, because I talk to people across the industry, and they often say that's where the bottleneck happens.
Mm.
So whilst the solicitors and the conveyancers themselves are enhancing and developing their systems,
Yeah.
often at the mercy of other parts of the process.
Yeah.
They haven't quite caught up with 21st century technology. So,
Yeah.
so I think, in answer, yes, it is changing. It's taking time, and it sounds cliched as well, but it's going to be about collaboration. It needs everyone to work together on this.
That's a
And we are seeing more of that.
I guess that's a challenge as well. It's particularly that's quite a fragmented market as well. There's many conveyancers, etc. And I guess probably that speed and efficiency of the different platforms that are developed could become a key kind of competitive driver, really, to kind of and I guess that those that are the most efficient and can adopt this new technology will kind of rise to the top, and those that don't.
They will, Mark. I agree. But equally, the consumer will drive. Consumer will drive the change. So, like we're seeing just now in other parts of the mortgage process and in other industries, consumer behaviour changes on the back of COVID, as I said earlier. Are driving consumers to use more digital, more technology engagement, and people will come to expect more of that. So it sounds logically, if you take that forward to the conveyancing part of the process, someone wants to move house, they'll want to move quicker, and they will challenge and want to understand why can't I do this on my phone, for example.
I guess things like digital ID and other technology. Interesting. I saw a stat the other day released by the Open Banking. I think it's a foundation that kind of lead that, saying that open banking usage has doubled during the last 6 months. I thought it was interesting because that was a bit of a slow starter over the last couple of years.
Agree.
I mean, pushed by government and industry that didn't really necessarily take off to start with. People didn't necessarily understand what that technology did or didn't feel comfortable. But that's interesting. That's really seems to founder's moment, really, and that obviously has some benefits for underwriting.
It does. It does, and we spoke with the lenders during the mortgage efficiency survey about open banking, and it's firmly on their agendas. But as you'd imagine, right here, right now, with everything that lenders are having to deal with, it's perhaps kind of dropped down the priority order a little bit, but it will be addressed. I'm sure it will be, and I think, as you said, consumer awareness has been low. Even the terminology, open banking.
Yes.
I've read in a few places, let's just call it, it's banking.
So intuitively, people often don't want to feel very open about their personal banking. From a branding perspective, I guess it's really interesting kind of. So, and interesting, actually, a lot of the instances of using open banking for payments now, they don't actually even call it open banking; they just call it bank payment or similar. So I guess so we actually last met up in person at the end of January at our Doc9's mortgage transformation roundtable in the Gherkin. And it feels a very long time ago now, doesn't it?
It does, yeah.
And there was we debated lots of sort of things related to mortgage technology as a group. And I guess there was a consensus, or I certainly was of the view that 2020 was building up to be a bit of a tipping point. The last few years there's been a lot of investment behind the scenes around getting ready to plug into APIs, etc. And obviously there was some sort of debate on how positive, how realistic my positive views were in the room. I guess it's fair to say that in a kind of roundabout way, the digital technology that kind of accelerated adoption in the sector in a way none of us could have expected. Do you feel, I mean, we've both been around the sector for a fair while now. There's been a number of false storms before when it comes to mortgage technology adoption. Do you think this time will be different?
I do, Mark. It certainly feels different.
Mm.
It definitely feels different. I think I'm trying to avoid using the word that everyone's using just now in terms of the landscape we're all in, the environment. Uncharted waters.
Yeah.
Where we are right now. And as I think I said earlier, no 2 days or 2 weeks feel the same right now. But I think everybody has, this has really caused everyone to kind of sit up and think about how are we going to future-proof our business going forward? How are we going to continue to deliver fantastic outcomes for customers, and smoother journeys, more efficient journeys, against a backdrop of this landscape that's not likely to change in the short to medium term. The conversations I've been having over the last, certainly over the last 2 or 3 weeks, even, with lenders particularly, people aren't returning to offices in droves, and that's not likely to happen, at the earliest until Q1 next year, maybe even beyond that. Who knows? So people's lenders' models and propositions are needing to adapt. And technology and the digitization of processes combined with the human touch and human interaction, and as you said earlier, third-party integrations, using APIs to access data to really help the process. I do think that's going to have to happen, and it is happening. As I say, we're talking to lenders more now than ever who realize, what's the quote? I'm hearing now more than ever a sense of phraseology around people don't want to be left behind. Hearing people say that more today than I did, let's say, back in January. So that tells me something. That tells me that businesses and organizations are genuinely looking at how do we evolve and use technology moving forward.
Yes, I agree. It'll be interesting to see next year. I guess that's 6 months in. 6 months in the future, you'll be kicking off a new round of surveys. It'll be interesting to see kind of how much of that intention and mindset shift has kind of turned into reality, I guess. And
yes,
if there's a bit of a sort of distinction between those that have moved ahead and those that perhaps haven't. It'll be interesting to see.
Definitely.
So in terms of, we're almost out of time for today, but as a final thought, I think your survey is available for people to get and download. Do you want to sort of share with our audience how they can get hold of a copy? Yeah,
no, absolutely. The full survey is online at our website, iress.com/MES 2020. I would thoroughly recommend people download and have a read, and my contact details are on there as well. If anyone's got questions or wants to gain more detail behind the insight, happy to have a conversation. Brilliant. And we'll include a link to that in the show notes as well. So brilliant. Okay, well, thanks a lot for your time today, Steve, and sharing that. That was really interesting. And hopefully we can catch up soon. Definitely. Thank you, Mark. Been great to chat.